Hello, and you're welcome to Global Business Insights, where you get more on the main business headlines across the globe. Yesterday, we saw a revival of meme stocks as a post from user Roaring Kitty, followed by a series of memes woke up the long dormant retail investors and sent shares of GameStop and AMC into the skies. This could mean the monetary conditions are still loose and interest rates perhaps would be higher for longer. All this as major US indices were just above flat at close. The Dow average was up 0.3%, S&P 500 also up 0.5%, while Nasdaq saw a higher gain of 0.8% for another record close. Fed Chairman Powell made a few remarks at the Foreign Bankers Association annual general meeting in Amsterdam, where he said inflation in Q1 was notable for the lack of further progress, adding that the Fed did not expect a smooth road on inflation and there is need for more patience to let policy do its work. The big economic event was, of course, Biden's trade attack at China EVs. The gloves are off, or are they? Biden says the US can compete anywhere, but China is cheating as it slammed massive tariffs on $18 billion worth of Chinese imports. Not material to the over $400 billion Chinese goods entering the US, but symbolic in its protectionism of US auto workers in the future, electric vehicle and advanced tech and green energy component space. China may prefer to wait for the outcome of the elections. Trump had also promised 60% flat tariffs, which Biden says is inflationary and untargeted and will hurt Americans. Meanwhile, Putin is off to China to cheer up his old pal. It's his first foreign visit of his new term as he woos Beijing to give more in its war in Ukraine. We got the producer price index as PPI in the US up 2.2% on a yearly basis in April. That was yesterday, which followed the 1.8% increase recorded in March. And that came much in line with market expectations. But on a monthly basis, PPI and the core PPI both rose 0.5% in April, much higher than the 0.2% expected due to strong gains in the costs of services. Powell described the PPI data as mixed. Today, US CPI, if we do see an upside miss, could bring traders out of their bullish trance. And Anglo-American is reconfiguring its portfolio, a restructuring that could mean an IPO of its diamond business, Dobears, as it considers a potential breakup via a demerger to fend off BHP. We did get some good news from Nigeria as the Minister of Communications, Innovation and the Digital Economy, Dr. Bosun Tijani, announced approval for the launch of a special purpose vehicle that will support delivery of an additional 90,000 kilometers of fibre optic cable, enhancing the ecosystem for digital startups and improving internet access in Nigeria to over 70%. But the Naira is also seeing a fresh weakness. Amazon's cloud business is getting a new head to accelerate its advance into artificial intelligence space. Adam Selipsky, the head of Amazon's amazingly successful cloud business, is exiting to be replaced by Matt Gorman, a company veteran who is going to be brought in to lead Amazon into the next phase of AI-driven growth. And of course, later in the day, we will bring the latest CPI data from the US and Nigeria. It does look like a battle for who can look tougher on China, Biden or Trump. US President Joe Biden ramped up tariffs on Chinese-made electric cars, solar panels, steel, and other goods. We are talking about 100% border tax on electric cars, said to be a response to China cheating and intended to protect US jobs. The tariffs announced would hit just to $18 billion worth of imports and as such largely symbolic, perhaps far more useful in shoring up votes in a tough election year. Levies on solar cells will go up from 25% to 50%. Certain steel and aluminium products will go up more than triple to 25%, up from 7.5% or less. The move, however, could rattle Beijing's dominance in monetizing opportunities from an energy transition as the US plays catch up and Europe decides how to de-risk. The changes are staggered to take effect from 2024 to 2026. In a research note, Oxford Economics agrees the moves are more symbolic bark than bite. Great political optics, which lifts inflation by a negligible 0.01 percentage points, according to Oxford Economics. Others disagree, especially if other European countries follow suit to avoid goods meant for the US dumped at their shores. Chinese officials have responded that the growth of its new energy industry, including EVs, lithium batteries, photovoltaic products, is built on continued technological innovation, complete industrial and supply chains, and full-on market competition, adding that the leading edge is a result of hard work and the comparative advantage and the rule of markets combined, not subsidies. But there are potential implications to this new feud, whether this helps Biden to return back to the White House or not. The new chapter of deglobalization is largely negative for business, especially if the European nations take similar actions. Higher costs of EVs, especially, and more expensive clean energy transition will weigh on global GDP growth. There are potential inflation implications depending on the economics and ramp up of local production in the US and if we do get retaliation from China. Protectionism reduces incentive for productivity and hurts innovation, so this is unlikely to enhance US competitiveness. Leaders from the Group of 7 developed economies will be plotting on how to protect their industries at a summit scheduled for next month. Emerging and developing economies are left with no choice but to introduce higher tariffs above cautiously predetermined quota of Chinese imports, and we could also see, albeit subtle, moves by China to make it more difficult for US companies like Tesla and Apple as it opens the door to friends in Russia, Africa, Middle East, and Latin America. The world is increasingly split into two corridors, and a reglobalization along these lines has its implications. The boost to nationalist populism across the globe typically leads to economic misdirection and inefficiencies. So we'll see how this develops, especially the reaction of European allies. Still in the US, Fed Chairman Jerome Powell, at a moderated discussion in Amsterdam, said the US economy has been performing very well and has a very strong labor market, with households also in good shape financially. But he also said there are labor shortages in many industries, added that the labor market is coming back into better balance and about as tight as it was before the pandemic. On inflation, the road has not been smooth, he says, and there is need for more patience, adding that restrictive policy may take longer to get inflation back to 2%. He said housing inflation has been a bit of a puzzle, adding that lags between lower market rates reflecting in the data have been longer than expected. We will get US inflation for April, where focus will be on shelter, used cars, fuel prices, for more clues on how the Fed may be reacting when it meets at its next FOMC meeting. In short, expect interest rates to be higher for at best slightly longer than has been previously telegraphed. Notably, Q1 earnings of US companies have shown remarkable resilience despite higher rate. Anglo investors have to choose on who has a better chance of restructuring Anglo-American's struggling portfolio, BHP or Anglo-American. This is as Anglo hastily packages a demerger proposal apparently to fend off a £34 billion takeover approach from rival BHP. UK-listed mining group Anglo says it will break itself up by selling or demerging its De Beers diamond business, its South Africa-based Anglo-American platinum operation, as well as its coking coal assets. These are the less profitable arms. Diamond prices have slumped, Russian sanctions have hurt the trade, and the emergence of lab-grown diamonds have eaten into key traditional markets. De Beers have made just $72 million in core profits last year, down from about $1.4 billion a year earlier. Still, Anglo CEO Duncan Wamblad said the market is expected to recover and the company shouldn't be selling the business at the bottom of the market. Anglo wants to focus better on its copper, iron ore, and crop nutrients businesses. BHP, the world's biggest miner, also wants Anglo's copper business, which is expected to boom as the world decarbonizes. My rough take is that a surgical restructuring is always easier done by an outsider, and BHP has a better chance of cutting off the fat than Anglo-American for obvious reasons. But there are other reasons why Anglo's plans may be preferred, especially as the South African government is said not to be keen on the BHP takeover. Definitely a space we will be watching. Nigeria Communication and Digital Economy Minister in a post, Bosun Tijani, is starting a new win in the digital space. The Federal Executive Council meeting yesterday approved the launch of a special purpose vehicle to deliver an extra 90,000 kilometers of fibre optic cable to complement existing connectivity infrastructure. The SPV will build the additional fibre optic coverage required to take Nigeria's connectivity backbone to a minimum of 125,000 kilometers from the current coverage of about 35,000, and according to him, becoming Africa's third longest terrestrial fiber optic backbone after Egypt and South Africa. Immediate benefits obviously include increasing internet penetration in Nigeria to over 70%, he says, potential reduction of the cost of access to internet by over 60%, and inclusion of at least 50% of the 33 million Nigerians currently excluded from access to the internet, and that would deliver improvements to economic activity and GDP growth. All one can say is that projects like this need to be speedily executed, so thumbs up. It was also confirmed last week that the story that Microsoft is shutting down Nigerian office is untrue. Contrary to widespread media reports, the Africa Development Center is also not shutting down. Instead, Microsoft, like any other organization, is only realigning roles within the business, and few Nigerian roles will certainly be impacted. Affected staff will be asked to apply for new roles within Microsoft, which is a standard practice within the organization. Later today, around midday, we get April CPI data. The print is expected to inch up higher. Google parent Alphabet yesterday launched an improved AI Gemini chatbot to strengthen its prized search engine as it races to compete with other AI rivals. Sony Group shares jumped 12% in early Tokyo trading after pledging higher shareholder returns and forecasted higher annual profits due to a boost from its image sensors business. Sony said it would spend up to $1.6 billion on a share buyback and gradually increase dividends. Brazilian President Lula da Silva has pushed out Petrobras CEO Jean-Paul Prat with Magda Chambriard, the former head of Brazilian oil and gas regulator ANP. Petrobras shares down more than 6% in after-hours trading as traders perceived the move as another act of political interference. And in the UK, HSBC and Deloitte are the latest businesses to withdraw job offers to foreign graduates as large employers are forced to reconsider contracts after the government introduced stricter visa rules for foreign graduates. Now, looking at Asian markets, Nikkei 225 as we speak is positive, up 0.10%. Hang Seng, that's the Hong Kong index, is down 0.22%. Shanghai Composite, the Chinese index, down 0.57%. Shenzhen Composite also down 0.67%, while the South Korean Kospi is up 0.11%. Well, that's it from me on Global Business Insights. This is Bode or Shosami. Please share, kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Remember, we will be looking at inflation in Nigeria and the US print later in the evening. Thank you very much for watching and following. Bye-bye.